All right, that sounds better. Okay, so there was a lot of chaos in the market today, and I was kind of inundated with a email and a few text messages expressing realistic concern. And so I thought maybe we'd get a chance to talk about that and explain what exactly happened and reiterate some of the rules and what it is that we try to do and explain to you that it probably isn't as bad as it looks like it is. And if it is, let me give you a few other indicators to let you know when it really is going to get bad, because it will. Okay. We have two different markets in the market. We have a bull market and we have a bear market. A bear market is when everything is largely going down. A bull market is when everything is largely going up. And we are at the end of a bull market. And if you look on the screen at my Telechart 2000, you can see the graph of the S&P 500, those 500 core stocks that we gauge to see market tone. Taken from a broad sector, from the tech sector, from energy, from textiles and manufacturing, all over the market, and they're piled into this core 500 group. And you can see that we've been largely moving up. And I'll just go ahead and kind of back out a little bit. You can see that we've had this large uptrend for quite some time. Okay, and so we're at the end of a bull market rather, because a bull market usually only lasts a couple of years, and we're approaching the 3-year mark on this particular bull market. Well, at the end of a bull market, it's really, really hard to make money. It's harder. I don't say really, really hard. It's harder to make money. At the beginning of a bull market, it's stupid easy. I mean, you just throw money into the market and you're going to make money because everything wants to go up at the beginning of a bull market. Well, you're at the end of a bull market. In fact, you're about 9 months overdue for what many people in the media would say a crash. We would call a correction, where we change direction in the overall market. The S&P, instead of largely going up, would turn around and go down. Okay, that's a bear market. Bear markets usually last 3, 6, 9 months at the tops. Most bear markets last 3 to 6 months. In the very beginning of a bear market, it's super easy to make money because everything wants to go down, so you just invest in put plays. It only lasts for a little while, like I said, 3 to 6 months, and then we go on about a 2-year hiatus and start a new bull market. And a new bull market is where we ultimately really truthfully want to be, because again, you just throw money in the market and you can't make a mistake. Everything wants to go up. It's awesome. Okay. Well, you're at the end of a bull market and you're 9 months overdue for a correction. You're 9 months overdue for the next bear. And so I don't think we're there yet. And to give you some, well, okay, here's today. So I'm going to zoom in. This is our candle for today for the S&P, and you can see we were down 23 points, and that seems like a large amount of money. But look, here not too long ago, just a month ago, here was one that was a 20-point down day. We back up a little bit more. This one over here was another 23-point day, negative, just like today. If I back way up, let's see here. I saw one. Here's a good one right here. That was a negative 40-point day. That was negative 40. We thought we were headed for a bear market at that time. This kind of wavy blue line that you see, that is our 50-day moving average. And the back end of this will fluctuate and change because of it's weighted. It's an average. So the back end is going to change just like the front end is going to change depending on, what happens within those time frames. And you could see we dipped down below the 50-day moving average, but we didn't stay there. We came back up. The bulls ran rampant. They're like, we're not done with this thing yet. Well, here's what's going to happen when we actually truthfully enter a bear market, when we've actually changed direction, okay? You will see this same sort of trend. We'll go down below this 50-day moving average, and you can see this right here. I'm just going to move that out the way just so, stop it. There we go. I just move it out the way. It'll dip down below this 50-day moving average and it'll come back up. But this blue line, this 50-day moving average, is going to act like resistance, and it won't be able to break through it, and it'll bounce off of it and it'll head back down. That's what we call a kiss goodbye. So when we do enter a bear market, that's the indicator that you're looking for. You're looking for this trend to go below the 50-day moving average, come back up to it, bump up against it, not be able to go through it, and ricochet back down again. And that will be our kiss goodbye and hello bear market, hello put place. Okay? Well, that didn't happen today. We'll go ahead and move this back down to where it was. Those are my trend lines. That didn't happen. What we're probably going to see is a continued downward. And you could see over the last 5 days, we actually hit this red line, which is our 20-day moving average. And we kind of rode along that. That's what we were bumping up against. That's usually the sign of a very bullish market. Everything wants to go up. Well, we invested in PSX. I'll pull it up on the screen. PSX. This was PSX. This is my buy day. I actually bought right at here at the end of this candle. And as you can see, this general trend is up. And I'm going to change this from 20 to 10 days. I don't know who just joined, but please mute your microphone until just a few minutes from now, and we'll let everybody speak. And you can see it would bounce off its 10-day and move back up. It just really liked the 10-day. You almost could not go wrong with this stock, and that's why we invested in it. I wanted to ride this until it changed direction. And it changed direction today. So 10-day, that was our line of resistance. And we started off the day bad, and we came all the way down, and we rested on the 10-day, and finally it just gave up, as did everything in the markets practically, and plowed right through it. And as soon as we went through this 10-day moving average, I got out of this stock. I sent out the alert. I lost $70 on this particular play. I started with $1,500 when we started this whole deal. I'm now at negative 70. So I've wiped out any gains that I made, and I'm actually now in the hole. So here's a question that I want to ask. Would you rather be learning how to do this while you were meeting some resistance, while it was probably the most difficult that it could be for you? Or would you rather learn this while it's super, super, super easy? And so now, if you want to reply to that, now unmute your microphone. I want to know, would you rather learn this while it's hard, or would you rather learn this while it's easy? Anyone?
Yeah, no. Learn now. This is definitely better to learn now, I think.
Okay. Who is that was speaking?
Yeah. That's Greg.
And why do you think it's better to learn now? Why would you think it's better for you to learn now?
Well, I don't think that if we were in the beginning of a bear market and we're go, we're making money, we're not learning anything.
Right.
We're just riding it up, and then all of a sudden when we hit a crash, we're like, okay, now what do we do?
Yeah, as soon as you run into a hiccup, a little problem, you won't recognize it for what it is, and it could be disastrous for you. So absolutely, I think that's absolutely right. This is the best time to learn. We got in the market in December. Look at it this way. December, the absolute worst month to be in the market to try to make money. Unless you have millions of dollars to invest and you use that as leverage, okay? The absolute worst time. The end of a bull market, the absolute worst time frame of that trend to be trying to make money. So you got involved in December and at the end of a bull market, and how much money have you lost? How much money have you lost, Greg, off these few plays?
Well, today was 90.
Okay.
Yeah. I think the other two was right around the same thing. And unfortunately, I missed your two wins. One of them was my fault, and the other one was I just didn't have enough money to buy into it. The FAST.
So the worst case scenario, you're down 200 out of what was your starting pile? $1,000, I think you told me.
1,000. Yeah,
Okay.
yeah. 1,000.
I would rather have lost 200 than be in the market for a while thinking everything's hunky-dory and not really learning everything and thinking how easy it is and turn around and lose 20,000. Okay?
Yeah, no, I agree. Because, I mean, if this was just to say, May or something, and we made money all the way to December, because as we go, we're going to want to put more contracts
Right.
in, and we haven't seen the pullback or the correction or whatever. And if we go 5, 10 contracts in, and all of a sudden we have a correction, we're basically going to lose all what we just made up. So understanding all of this now is definitely a thumbs up.
Well, let's look at the S&P real quick. Here's what I think's going to happen. Well, let's back up and talk about what happened on Friday. Friday, we thought we knew what was going to be on the report, and the reason why we knew what was going to be on the jobs report is there's a company called ADP, and they do an enormous amount of payroll check processing for various different companies, and they reported that for the month of December, there was 170,000 new filings or new paychecks that they actually processed for different people. Well, that was a good sign. That meant that we were probably going to get a good report on Friday when it rolled out. Well, when the government reported on Friday how many jobs were actually created, they created 74,000. Now, here's where politics step in. Unfortunately, we don't all get along. The Democrats and the Republicans, they just don't get along. I don't know which side of the fence you fall on. It's irrelevant. They just never see eye to eye. And if you're a Democrat, you just don't see eye to eye with a Republican and vice versa. Well, politics tends to always come into play in the market whenever they can use it for their advantage. And up until now, it's been, an overinflated unemployment rate and an overinflated jobs ratio. And then months later, when you dig into it, you find out that number was overinflated and you really didn't get 200,000 jobs that month. You got 100. And I think, this is just supposition, I believe that the existing administration needed to hang something around the necks of the Republicans. I think that's what they did. So instead of overinflating the numbers, which is what they have habitually been done, and every administration does it, every single one of them does it. They're all guilty. Instead of overinflating the number and downgrading that number later, which has usually been the habit, and you can look that history up yourself, they underinflated the number. Most of the analysts looking at this believe that that number is actually going to be higher. Okay, and that's why on Friday, here's Friday, we dipped way down, but we gained all of our losses back and actually finished on the day up 4 points. And so, okay, fine. So apparently it wasn't that bad. Well, then they get into it over the weekend and they see, while we probably gained more jobs, there was a bunch of other nasty stuff in the thing that they just didn't like. They chewed over that on the weekend. It caught a lot of bad press. Then Monday hits. Hello, earnings seasons. From here to the middle of February, companies are going to report their earnings, okay? And right off the bat, we start getting hammered with companies that say they didn't earn what the analysts thought they were going to earn. And then we had other companies step in and said, we're supposed to report our earnings next month, but we're just warning you now, it's probably not going to be as good as we thought. And everything started tanking. It just started tanking. And so I hit my stop out point. I bailed on it. I had no choice. I kind of wish I'd have stayed in now, but I bailed on it. And I'll show you why I think I should have stayed in. I'll go back to PSX real quick. This particular stock, like we said, bounces off that 10-day. And you can see that red line. Well, if I change that ratio to 20, because that's our next stopping point, and this is actually front-weighted. Let me change that from front-weighted to exponential. Look at there. We didn't even go through the 20-day. That's our next level of resistance, and you could see we got really close to it. We got really close to it and bounced back up off of it. That's why we have a candle. But it doesn't matter. I'd rather get out now because I'm kind of anxious to see what's going to happen. I think tomorrow's going to see another down day. If we go back to the S&P, I'm expecting us to get down to the 50, and then I'm curious as to what's going to happen. I think it's probably going to bounce back off of it. But we have a key report coming out on Thursday, and I don't think it's going to be pretty. It's a jobs report. And I don't know. We'll see what happens. I think it'll probably bounce off the 50-day. It may dip below it a little bit, but come back up. If it doesn't, I'm praying that it doesn't. I hope it's really crappy. I hope we plow through the 50-day. I hope we come back up to it, bump off of it, get our kiss goodbye, and go down and be in a bear market. I'm ready for the bear market. I've learned all I want to learn. I'm ready to actually make money now. And a bear market, in the beginning of it, it will be really easy to make money on put plays. So that's what I think is going to happen. And with earnings seasons, all we need is a couple of three big boys like Alcoa, IBM, one of these guys to miss their earnings. That'll make it plow below the 50-day. And in addition, that report on Thursday, if it's bad, and I think it's probably going to be bad, that may be all we need. Like I said, we're 9 months overdue. Every analyst that you listen to will tell you that. And when it corrects, we're looking at a 17-point correction on the overall market. So it's going to go down a lot. Anybody else have any thoughts, concerns? No one? When it started tanking today, did you panic just a little bit? Anyone?
Hey, Jimmy, this is Mike from
Okay.
Dallas. Hey, Jimmy, Mike from Dallas. Just one thing, and this might even be a little bit off topic, but maybe even be relevant. Have you even considered having maybe like a 1 day or 2 day seminar up at your place, just face to
Yes, we
face
have.
meeting?
We've strongly considered that. That's something I think that we want to do because everything that we've talked about is there on the website to date. But it's nice to sit down and revisit the whole thing. Absolutely. And I'm not sure if we're going to want to do it here, but I don't think we'd get enough people to, I mean, you're close, but most everybody lives too far away. We might do something like this and kind of go through it in sections,
All righty.
Um,
Thank
I,
you.
I want you guys to know I'm charging for those instant alert things, but I don't want to. I really don't want to make anything off this. I really don't. To do that thing is expensive for me, and so y'all are incurring the weight of that. If this starts taking off, I'm going to eat that bill myself. And there will never be an advertiser on the show, and as soon as I can, I will eat that bill and stop charging you and let anybody who wants to sign up for it. I really just want to try to help people out, and I truly believe that this will. I have no doubt in my mind. I don't know how many of you people believe like I do, but I believe I've received numerous confirmations that this is where, by divine intervention, that I'm supposed to be. I believe that. I really do. And I've not seen anything pull the brakes on that thought process. For a while there, I thought it was crazy, but I think this is going to work. Y'all stick with it. We're doing this at the right time. Pay attention to what you're seeing. Learn these lessons. Deal with your emotions. The checklist that we gave you, Tanner and I have talked about it. We're going to be amending that checklist just a bit more. But let me show you some ones that were on, unless somebody else has anything. I'll show you some stocks that I've been looking at and explain to you why they're on the list to begin with. Does anybody else have anything else before we do that?
Hey, Jimmy, this is Charles.
Yeah, go ahead.
Hey, since it's going to go down, and everybody, I mean, since you guys think it's going to go down so far, how come we're not putting in put plays?
Well, you want a put play when I know this is going to sound odd. You want market tone to still be good. You don't want to be negative and pessimistic. Okay? So, yeah, if the market was turning down and we're moving down, you'd look for put plays. But I think I want to wait Okay, I just want to err on the side of caution, and the only reason I want to put in a put play is if we are actually in a bear market. That's it. Let me show you an exception to that rule. I'm going to show you IBM. Love IBM. Love me some IBM. Look at that. Look how pretty that trend line is. You can see we're kind of a rolling stock. Right now we're moving down. We think this large hump is a correction. We think it's going to begin to trend up. But let's put some trend lines on it real quick just so you can kind of get an idea. Usually go from peak to peak. Oops, let me move that out that way. That looks about right. I like to scooch my lines in a little bit because these become buy points for me. So in a great situation, and I can't afford this, I would love to afford this option, okay? Because up until now, see how it's really broken out of its trend line? We kind of have a W here going, and that usually signifies a direction change. We believe that the market's going to go up, or IBM's going to go up here. And in this particular situation, if I tie into this stock, we'll do the most recent trends. If I were to tie into it here, you can see that it goes down, it goes up, goes sideways, dips down, goes sideways, dips down, goes back up, goes all the way down. If you have patience and you have the capital resources, if I had $10,000 to play with, I could tie into this stock right around this area. And I could ride it for 2 weeks until I got to here and then turn around and sell. So I could ride a put play down over the course of 2 to 3 weeks, and then I could ride a call play up. Look, on a call play, you'd get to this point and it'd go down and you'd start questioning yourself. Then it'd go back up. Then it'd start going down and you'd start questioning yourself, and it'd go down some more. And all this time you're thinking, should I get out? But then it turns around and goes back up again. On a stock like this, you can afford to hang on to it. I was hoping to do you guys a favor on PXX. Look how long it's been running this trend. If we'd have got into it 2 weeks ago, you could have rode on this particular option for 2 weeks and have doubled and tripled your money pretty easily. Okay, let's look at FAST. FAST was one we just went into. You see how we've got a wiggle, and that wiggle just keeps getting bigger as it goes out? Even today, it wiggled up like it was supposed to before it was supposed to turn down, okay? Let me make this go away. Here's one trend line that I put on it. Let's put another one. We call this an ascending wedge, because it's mainly going up, okay? And you don't know how many times it's going to do this, but it's like clockwork. And until it breaks out of its trend, you can play this stock up and down. I found another one. I found this on Saturday. This is APA. Let me make this line go away so you can see it better. Let me make my pivot points go away so you can see it better. You see that wiggle? That's an ascending wedge. It starts at a narrow point and it keeps getting bigger. Now today, of course, it tanked. It went outside its trend. We don't know if it'll return to it. Stocks like these, stocks like IBM, where they had this nice little roll to it, you can ride those things all day long. Put, play, call, play. Put, play, call, play. But right now, at the end of a bull market, when everything wants to push it up, we just think it's going to be safer just to not involve ourselves with puts to begin with. When we get into a new bear market, we can get into calls and puts at the same time. Maybe not initially, but a month into it, you can do a call and a put, and a call and a put, and a call and a put. When we get into a new bull market, you're going to do calls only, and then you'll go call, put, and then when you get towards the end of it, calls only. So it's only in the middle that I personally feel safe about doing both. Does that make sense?
Yeah.
Is it in a when the market tone's really positive, everything wants to push that stock up. Any kind of remotely good news, and it's all about perception, right? Anything that can be perceived as good will push that thing the opposite direction. And so you really kind of only want to be in call plays right now. Even on this bad day. Let me show you another one that Tanner got into. What was the name of that? DDD. He got into this one. He got into this one yesterday. He thought he was in a good point because it had dropped down. This is another one of those that rides its 10-day moving average. Let me change that to show you. See, it rides its 10-day moving average. He watched it till it came down, hits his 10, confirmed that it came up, and he got in. He got in right here. And then today, what does it do? It starts tanking. He's still in this stock. If I move this to 20 days again, because those are our resistance line, 10, 20, 50. Look at there. It kissed the 20, bounced right back off of it. He had his finger on the mouse to get out of this, but it bounced back off of it. When I go to the news, let's pull the news up real quick. I don't see any big red flags that says, the market's in trouble. When I listened to Fox Business Channel, I didn't hear any big headlines other than the market went through the correction. The market is skittish on bad news, but they didn't hang out on it. They just kind of touched on the topic and then they left it. And we had a 23-point reduction today. Well, that's normal. I mean, again, when we go back to the S&P 500, we have 20-point corrections all the time. There's a 20-point correction. Here's a 23-point correction. We turn around and went up 23 points the next day. Those are normal corrections. We're supposed to go up. We're supposed to go down. That's the way the market functions. It has to breathe. It breathes in. It breathes out. We should see it breathe back out. I think there's still more life in it. A couple of the key people that I like to tend to be rational thinkers. They've given me no indication that it's not going to bounce off its 50-day. That blue line right here, it's going to bounce off of that probably tomorrow or the next day. If it dips below it, I'm looking for it to come on back up. But if we go below the 50, and when we come back up, it bounces off of it, and the 50-day moving average acts like resistance and then bounces back down, we're done. We're done with the bull market. Personally, I would like to see that, this week. But I don't think we will. We'll see. Did any of that make any sense? I'm going to take the silence as a yes.
Yeah, it makes sense.
Okay, let's look at some stocks that are on my long list. Here's my long list and my short list. My short list was the blue ones. Here we go. This was a really bad day today, right? This is a stock that when it hits its 50 tends to bounce off of it. We didn't really go that far. Of course, I never really got any good confirmation to get into it today either. Texas Instruments. This one I was looking at to get in today, but it shattered below its 50 because of the bad market tone today. Priceline went below its 50, but it recovered. Google, another one of these stocks that rides that 10-day moving average. Look, it could not go below the 10-day moving average. And when I see stocks like this bounce back and recover, Google, Priceline, here's another one that rides its 10-day moving average. I wish I'd have been into this one today. It went all the way up to this point, tanked all the way back down, but it couldn't go any lower. So when I see these signs, I tend to believe that, we're not in a bear market yet. Here's another one that I like, Western Digital. It just has that nice steady progression up. And even on a day like today, let me change that back to 10. Even on a day like today, it survived. It didn't go below the 10-day moving average. I wish I'd have been in this one instead of PSX, but that's the way the cookie crumbles. So this one is coming off my list because we're at the end of that trend. This was just pushing up just like the other ones I was showing you, but we've had a nice progression round top. Round tops are usually dangerous. We formed a round top, and so I'm officially going to pull that off my list. In fact, I'll do it now. Here's another one that tends to, when it hits the 50, bounce off of it. We hit the 50. We couldn't go through it. You know, if market tone tomorrow has a reversal and it's positive, this would be a great call play to go into. Why? Because it bounced off the 50. Apple. I don't know how I feel about Apple. I think I'm going to stay away from this. This is almost like an M. An M is usually a direction change, and it's kind of M-ish looking. So I don't feel good about it anymore. Here's another one that when it hits its 50, it tends to bounce off of it. It's a stock that likes to go up. Look how affordable that one is. That's a $26 stock. Even on a day like today, it didn't go below its 50. That's awesome. EMR could not go below its 50. It's in a great position for a call play right now, provided that we had good market tone tomorrow. This is another one that tends to like its 10-day. And if it wasn't for this day, let me change the way that looks. See how it kind of stair steps? Stair steps are a pattern too. It'll kind of go horizontal for a ways, and then it'll go ahead and stair step up and go horizontal for a ways. I was watching this one for that next stair step out, but because of today, it's broke out of its trend. So we look to see what some of these will do tomorrow. They may come off the list. Here's another one that likes to follow its 10-day, but today messed it up. Win is the same thing. This is a Win Casinos. Let me go back to that, sorry. But this one never actually did hit the 10-day. It hasn't touched its 10-day in 2 weeks. So I'm kind of staying away from it. Even on a day like today, it didn't even get close to its 10-day moving average. That's too steep a climb. That just makes me nervous. But I'm watching it because if it comes down and bounces off its 10-day, I'd get back in it on a call. Capital One, same thing. This one, if it had bounced off its 10-day, would be in a great position for a call, provided, again, we had good market tone. Here's one I was looking at today. It started up. It hovered right here at this line that you see that's horizontal. I had set an alert on this line. I actually got the alert because it hit it. That was my buy point, but it just didn't do it on volume, and it just stayed there, and then it tanked. So I'm glad I didn't buy into it today. APA, this is that one that has that, what we call an ascending wedge. It kind of looks like a tornado. I kind of like that. If it wasn't for today, you know, again, it actually hit its resistance and hung out there for the longest time, and then it tanked right there towards the end. So this one is on my radar list because of that. APD is almost a rolling stock, which means it's largely moving sideways. Whirlpool, love this stock. Love this stock because it produces here over the last few weeks some trend lines that are very, very reliable. And it went down and hit its trend line, and look, it could not go through it. It bounced right back off of it. So that trend line, this is a trend line that we drew. In fact, I could probably move that out a bit, and that's probably a little bit more realistic about where we are. This would be a great position for a call, but it's a $155 stock, and I can't afford the option on it. This is that stair step pattern. Okay, even on today, it didn't really break down like it's supposed to. You know, if every one of these stocks were showing me nothing but negativity, I'd say, yeah, we're probably looking at bear market. And I think we're knocking on the door of bear market, to be perfectly honest. But I just don't see all of these stocks changing. I guarantee you we come back on PSX tomorrow. Guarantee you. Texas Instrument had started to develop a nice little reliable trend other than today, and then it plowed through the 50. SanDisk. These guys make memory cards for cameras and stuff, so some of y'all are familiar with that. I don't know what made it go through the roof here a couple of days ago, but I was kicking myself for not being in it.
Did you see Jimmy? Did you see the news release on their new product for SanDisk?
Oh yeah, it was a video card, a processor on a video card, wasn't it?
Yeah, some kind of Wi-Fi thing that you can access from, like, say, your iPad or something, and it can use an actual card.
Oh no, I
Like
had
a-
seen something
you know,
else too.
Yeah, I don't know. I saw it was. I guess it came out at CES, and I thought maybe that was the jump.
That
on
may
their
have been
stock.
it. If you look down here towards the bottom, here's something we like to look at too. This little blue line. It's blue for me. It could be any color you want to. This is the volume, okay? And on that day we had tremendous heavy volume. This is our average. This is, and you could see we plow through there. If we go on the minute chart, let me pick. We'll just look at this one. Let's look at the minute. This this kind of light teal colored line is our average. And usually when we break outside that, in which we did that all day today, everything was pushing, sell, 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 sell. There's a whole bunch of red candles pushing through that line. It bounced back on the end, but that really doesn't mean anything. Let me see if I can find another one. Let's look at Priceline. I like to look at Priceline, not that I can afford it, because it's $1,138 a share. I like to look at it because it's so heavily weighted within the S&P 500, because it's so large, that the direction Priceline goes, generally I find that that's the direction that the S&P 500 goes. When this thing goes up, the S&P goes up. When it goes down, the S&P goes down, because it's $1,138 a share, and everybody, likes it. Now, see, here's a good indication, because this is such a very popular stock right now within the S&P. Look, these three, this is the last, 15, 20 minutes of the day. Look how much green on heavy volume that we see pushing up. It's just not one spike in the last minute. It's 15 minutes full. So I still see a large amount of positive things in the market, but the overall market tone just is pessimistic itself today. And it's probably going to be that way tomorrow, but I think there's a lot of bull still left in it, if that makes any sense. While I'm here, let's say today may not be a great example. Let's say you were thinking about going into a put play on this particular stock. Well, right here is this yellow line. This is my open for the day. That's where I opened, okay? And you can see I tanked. I came back up to my open. I went down. Then I soared. Okay, and then I rode up here, and if I had trend lines on it, pivot points on it, you would see that this was actually on one of my pivot points, and then it started moving down. Well, I would wait for it to cross through one of those pivot points, and there was one right here. Let me see if I can just go ahead and add those pivot points. There we go. So see, it's falling through a pivot point. It dips down below it. Okay, I think to myself, well, maybe I'll wait till it gets to the actual open. It plows through the open, and then I'm going to try to match up those candles, and I'm going to go, well, is it on heavy volume? Well, it was, because if this little line, this kind of teal-colored line, is my average, well, then, yeah, I plowed through on heavy volume during that time frame. And so that signals to me that maybe that's a buy point. If it goes low and there's no heavy volume, you got to be skeptical. And the reason why is because the market maker, there's a guy on a computer somewhere that's determining what the price of this stock is every single minute of the day. And he uses orders that come in to gauge that, but he also manipulates it. He manipulates it. So he wants you to buy that stock. So he may cause that stock to drop in price with no volume at all. No volume at all, but yet it drops in price because he's trying to entice you into buying it. Why? Because when you buy the stock or you sell the stock or the option, the market maker makes something on it. So that's why these big spikes, that's what I'm looking for as an indicator for a buy point for me, not because it dropped below a certain point. It dropped below a certain point on volume. That's what I'm looking for, on volume. Otherwise, it's probably just the market maker trying to pull strings. Toy with me, dink with me, jack with me. I could be a little bit more vulgar because I've learned that these people are just cruel. But anyway, does that make sense too? I know maybe today's not a good reference point. Let's look at PSX. Again, this was one of them. See if I can back far enough up to... No, you're just not going to see it on your screen. If we could go back a couple of days, you could see on my buy point to go up, it went through one of my pivot points, okay? And again, those guys use pivot points, so we use them. That's why. It had went through one of these pivot points, but I had a corresponding really long candle to indicate volume to back it up, okay? So I didn't just buy it because it dipped through it. I bought it because I had a big, long spike to back it up. That means one of the big boys bought in, okay? They bought 10, 50, 100,000 shares and moved that stock. They did it, not the market maker, the big boys, those mutual fund managers. They're the ones who moved the yardstick, and that's why I bought in. When you're looking for a buy point yourself too, it's the same thing, okay? And if I send out a text alert and you think to yourself, okay, I want to go in on this. If let's say we're on a call play, all right, and I'm waiting for it to go down and hit a certain point and bounce back off of it, and let's pretend, and just for yuck's sake, that point is right here, okay? Well, when I go down to it and I bounce back off of it, that's when I'm looking to buy, okay? And if I go off on heavy volume, and you can see we got a lot of green arrows pointing up, well, now that's a good signal for me to buy. But when you get it, when you get the text alert and you're looking at that, you're looking for a good buy point for you too. So maybe you let it peak a little and come back down, because that's as it comes down, the price of the option drops. You already got your buy-in confirmation on that pivot point in this time frame, okay? But if you're buying just instantly, you may not be buying at a good point. You may want to let it linger just a minute and see if it dips, because you look at all these dips. And you want to catch it on a down point so that you can get, the best price for the option. Does that make sense? And anybody can chime in now.
Yeah, that makes sense. I lost probably $20 just for that reason, because I went straight to it right after your text and jumped in and had to pay top dollar for this actual stock here. I think I got like 630. It was 630.
Okay.
Now, so and I watched it, and I could have waited because it did dip back actually too.
Patience is a wonderful thing, and I confess I don't have a lot of it, and I'm learning patience on this. I've been having to, Tanner's been doing this for a while, but I'm kind of new at this, like most of you guys, and I'm like, I got to go. Do I need to go? I need to go. I need to go now. Oh my God, I'm going to miss it. I'm going to miss it. I'm going to miss it. Keep editing the order, trying to change it, get them to change. Do I do a market order? Okay, you don't do a market order. You don't want to do a market order. I mean, the market maker wants you to do a market order. Okay, he really does, because, again, he gets commission off of all this stuff. Well, if you do a market order, you're actually doing a disservice to the guy behind you. Okay, and I learned that with the first option that I went into, because we're like, I think I need to go in now. And there was only 10 cents difference between the bid price and the ask price. So I said, well, I'll just do a market order. The minute I did the market order and did not try to negotiate for that price, it instantly raised the option. Okay, that means the next person behind me that was going to try to get on this, which I knew was probably going to be one of you guys, were going to pay more than me. Now, you're probably always going to pay more than me, But if I can keep that from happening to the next die as much as possible, I'm going to bid. So even if there's 10 cents difference between the price of the option, up it by a nickel and let it sit and see if it waits. Try to resist getting that market order. Sometimes you have to do a market order to get into it. If you just really want to get into it, you may have to, or get out of it. You may have to. Today I did a market order. I wanted out of it bad. So sometimes you just have to. But if you can be just a little bit more patient and put in that bid for even a nickel difference for a 10-cent separation, you put in a nickel a difference, in the middle there. It'll be better for the next guy that's trying to get into. And I know a lot of these traders, they don't care about the next guy, but I do. So I guess that's really all I got. The bottom line is I don't think today was as bad as it looked like. If we go back to reference and look at those, let me go back to the daily chart. If we look at those references for big corrections like that on the day, 20 point correction, 23-point correction, 20-point correction, that's normal. So I don't think we had anything to be fearful on. The big key is getting down here to the 50. Are we going to go to the 50? We should now because we broke through the 20. The next stopping point is the 50. We're going to get to the 50. We may get to it tomorrow. If we get to the 50 tomorrow, now I'm beginning to look for a bear market, because if that report comes out, it's all about perception and it's all about what the big boys want to do. If we get to the 50 tomorrow, and on Thursday, we have a bad report and we bounce off the 50 anyway, it means they're not ready for a correction. All right, well, I'll go look for call plays. If we get to the 50 and we hang out there and we get a bad report and we go on down, now I'm looking for it to come up and hit the 50 again, and it'll be like a ceiling. It won't be able to break back through it into that channel. Now, if it bounces off of that and can't get into it, we're in a bear market. We're done. That's it. That will be the last straw. And that's been the case every single time we went into a bear market. We went through the 50, came back up to it, could not break back through it. It was a kiss goodbye, and we were in a bear market. And you'll see the same thing when we go into the next bull market, only in reverse. So that's what happened today. I don't think it was as bad as we thought it was going to be, or as bad as it initially felt if you were watching it. Don't panic. If you were in the PSX with me and you lost money on it, I'm sorry. I did too. But we didn't lose much. And if we go down to the 50 and we bounce off the 50 and market tone changes and it begins to get positive again, we'll be back into some call plays, because there's a ton of them that look like fast, have that wiggle up and down, nice predictable pattern. I eventually want to get to where I can afford IBM, because I can go into it for 2 weeks at a time and not really worry about it. Why? Because some big dog is using this as a cash cow and we're just riding in the wake. There's a ton of them.
Hey, Jimmy,
go ahead.
Does IBM have the split or the cheaper options?
No, there's only 5 options that 5 stocks that have that cheaper broken contract, that contract for 10. And I think it's Amazon, Google. It's not Priceline. Amazon, Google.
I think you did Apple was one of them.
3, and there's 2 other ones. I don't remember what they are.
So it probably got to be $500-$600.
Well, this is a new thing. Like here in the last few months, they've started doing that. So I predict you'll see more. It's been pretty popular. So it started with one stock, floated it, and tried it out, and it was popular because people like me could afford it. Now that $25 option, it was $250 instead of $2,500.
Right. I also seen a lot of chatter today about metals, gold. How they had an up day versus everything else kind of going down.
Well, when the market has a correction, you have to look for some place to put it. There's only two places that you can put it if the market's not going your direction. That's bonds, and that's in precious metals, gold. So when the stock market does bad, gold tends to do better. Bonds tend to do better. Here's another indicator for a bear market. If the bond yield is more than 3%, that becomes more attractive to people that are in the stock market, especially at the end of a bull run. Everybody knows this is at the end of a bull. So you're here at the end of a bull. It's harder to find stocks that are moving upwards, okay, that can give you that dividend yield that you're looking for. And instead, the government offers bonds. The Fed offers treasury bonds that yield 3% or higher. Well, that's guaranteed money. They'll start switching and going into bonds. So there'll be less money in the actual stock market and more money in treasury bonds. That's another indicator. And we have flirted at 3% probably 5 or 6 times within the last 2 months. So we're getting close. Like I said, we're knocking on the door. Now, up until this point, gold was in the tank. Gold's been losing money for the last 6 months.
Go to GDX. Like they were saying, GDX is, there's GLD and GDX. Look at GDX real quick though. Wait, that's not. Yeah. That's one of them.
That says financial. It's gold miners. That's okay. So that's one of those ETFs. Okay. So this is a collection of stocks.
Yeah, GLD is actually the gold itself. But, GDX is what I was looking at first. Saying that, I guess it's a reversal from 2013. I guess 2013, these were all going down. They started to go down, and now they're saying, they're wanting to go up. It looks like.
Okay, but look, here's your bubble. Here's the bubble. The bubble popped on the gold market. Okay, so we've been largely moving down this whole time. Right. This right here corresponds to this with the market. The market went the opposite direction, so gold became more attractive. Mm-hmm. Today, you see, gold moved up. Why? Because the market moved down. I had to find someplace else to put my money.
Right. Yeah. That's kind of what I was just saying that that it might start to be the bears coming in, and if gold and stuff is going to start turning on us and going up.
That's absolutely right. Like I said, if the market moves down, see, these big boys, they don't play options. Only we do. Yeah. They go into stocks. Why? Because if you got 1 million shares of something and it moves a penny, that's all you need it to do. They don't go into trying to figure out and calculate. That's too much math and too much of a headache for them. They pyramid their money into a stock, which inflates the stock over a period of days, and then they pyramid it back out, take it out in stages, which causes the stock to devalue. They sell short. Okay. Here's some. Do you know what selling short actually is? This is scary. Okay. This will blow your mind if you've never actually had a definition of selling short. So at the beginning of a day, this guy was going to look at this stock, and he says, that stock's $50. I believe by the end of the day, it's going to be $45. So I'm going to offer to sell that $50 stock for $47. Well, if the regular market has the stock for $50 and you want it, and some joker is going to sell it to you for $47, you just saved yourself $3. So I'm going to go buy it from him. Here's the deal. He don't actually own the stock. He does not own the stock. Now, you have to have a significant amount of money in your trading account for them to allow you to be able to do it. But basically, you're writing an IOU to the trading company saying, all right, I want to sell the stock for $47, but I don't have it. Just go ahead and give it to them anyway. I'll give you the money later. Now, at the end of the day, it goes to $45 like you predicted it would. You then buy the stock for $45 and turn around and hand it off to the person that you sold it to for $47, and you made $2. That's what selling short is. Is that not crazy? You got to have some serious cojones to do that, and B, you got to have a lot of capital resources to be able to do it.
Yeah.
Anything else?
No, I don't have anything. If anybody else does, like, can jump in. If you have a question, somebody ask it, because one of us may not or may need to know that answer too. So don't feel like you have a stupid question, guys.
So I'm just going to run down the list then, since nobody wants to speak up. Charles Wood, unmute your microphone. Do you have any questions, thoughts, concerns, observations, anything you'd like to contribute?
No, actually, you answered my question earlier. I was the one that asked about the put plays.
Okay. Does that make sense to you, though? I think we should err
Yeah.
on the side of caution. You know, I got $1,500 to play with. And so I got $70 less than that today. Thank you. But that's all I got. That's my entire seed pile. So I just want to err on the side of caution for the beginning, for the right now.
Can we just say, in short, we just gotta wait for confirmation to start putting from today, because today's not enough information to start throwing puts out. I
No,
don't think.
absolutely. We don't have enough information. Absolutely not.
So I mean, all the graphs and stuff, Charles, that Jimmy was throwing at you. If you don't understand what he was doing, just confirmation is what he's looking for to be able to start doing puts. We're waiting for a confirmation for a bear market.
Right.
Okay.
All right. I don't know who guest 808 is, but you unmute your microphone and you say something. Observations, concerns. It's likely the person who is guest 808 doesn't even know who they are.
Hey, did anybody have an issue trying to figure out how to get actually into the call? I mean, once you pull up the software, if you don't click mic and speakers, it thinks you're going to be on a telephone and you have to call in. Is that right?
Oh,
I'm trying to figure out why it says 9 out of 26. Like, maybe those other people couldn't figure out that they need to unclick telephone and click mic and speakers if they're using.
I don't know.
Yeah.
It has a phone number that you can actually call in on, and they may have actually done that. But who's James? I think that's actually me. Is there another James on here?
I think it kept saying James is going in and out. It kept saying James is here, and then James is left, James is here. For me, that's what it was showing on mine, so I don't know if they're having connection issues.
What about you, Catherine?
Hi, how y'all doing?
Hi.
Wow.
I think we definitely should err on the side of caution, but at the same time, I think it'll be good. Let it crash, let it burn, and then let's buy it.
Oh, God, that's funny.
And I did good on my VLO trade. I did good.
Yeah.
I bought in when you did, as you know. We talked about it. And then I didn't get out. I didn't think it was the right time.
Well, in truth, it wasn't. You
you
did a good call on that. Tanner and I talked on that one. I said, I think we've got a few days left in this before we had a pause, but it's an uptrending stock. I really think we should be in it for a week or 2 weeks, and he says, well, I agree with you. I said, but there's only one problem with that. It would feel really good to put some profit in my back pocket And I know there's a few people that have followed me that would think the same thing. So I think I'm going to go ahead and pull out because I know they're probably going to follow me out, and at least they'll have cashed in a few dollars.
Yeah, but then I noticed you bought into PSX, which is the same type of company.
Yep.
So then I was like, well, I'm not going to sell this ship. But then I noticed that fuel prices were going down in general. So I was getting out of it on Friday regardless. Now I'm kind of looking at some biotechs that I want to buy into. I'm thinking about it anyway. And I actually bought some stock today. I didn't do a put or call, but I bought some stock in a biotech company. Because there's some conference going on in San Francisco about that, and the trend has been that after this conference on Thursday that usually these biotech stocks go up. So I guess we'll see what happens. It's kind of a long-term investment.
There's nothing wrong with that, especially if emerging markets, these stocks that are newer and they're focusing on things that haven't been focused on before, these emerging markets, that's usually pretty good. That's one of the reasons Tanner bought into DDD. Basically, they make those 3D printers, and they have the patent on them too. So there's other companies that make 3D printers now, but they have the patent on it, so they get a little royalty commission off of it and stuff. So, and it's been in the news. So, believe it or not, I believe right now IBM, if you're going to buy stock and you had the cash resources, I think IBM's on a turnaround. I just think they're going to move up for a while. I wouldn't usually invest in a blue chip stock, and they are a blue chip stock, unless I was in a hold pattern. I probably should tell you what I mean by that. If I want growth out of it, I would invest in these emerging markets. Anything pharmaceuticals, computers, things of that nature. But blue chip stocks are great for holding. And here's what I mean by that. I sincerely believe, and y'all probably believe the same way, that we are in the death throes of the dollar. I think our debt's going to kill us to the point that we have to give up our dollar in exchange for a relief of debt for a new currency. I believe that's going to happen within the next 10 years. Now, I could be dead wrong. I pray to God I'm wrong. I really, really pray to God I'm wrong on that. But I think that's what's going to happen. Well, if we have the dollar devalue to the point where something like that's going to happen and we roll around to a new currency, well, where do I put my money in? I need to put my money into something that when and if we ever do roll over to a new currency, and I want to trade it in for the new currency, I need something that's going to hold its value. Hello, blue chip stocks. Okay? They are huge. They've been around forever. They're not going anywhere. And so if you tie in your money for that purposes and you're using it like a bank to store your cash, well, you now own stock. You own stock in that company. And should something ever happen to the dollar, God forbid, okay, you now own a stake of a company that probably will weather the storm. And when the reset happens and everything shakes out, you now have something you can trade in for that new currency. What if we don't ever get rid of the dollar? We just go through a really bad time where the dollar does devalue, and that's a very likely scenario. We either face, hyperinflation or, God help us, deflation, which is way, 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 way worse. Okay, we go into a deflation scenario. Well, having resources and assets tied into a big blue chip company that will probably weather the storm is a good thing. So I like blue chips just to hold your assets.
I agree. Couldn't agree more.
I just don't have any assets right now to hold.
Well, you're in the same boat as a lot of us, but that's why we're here. We're going to change that.
All right, Mike, your turn, man.
Hey, James, I just trust you, so I'm just a newbie and I'm learning, so I'm just listening.
All right. Do you feel comfortable about everything that's happened?
Yes, I do.
Okay.
My account hasn't been funded yet, so I'm fine.
Mr. Thomas Swartwood.
Morning.
Good morning.
It's always morning for me.
So have you
No,
been able to
I'm
fund
good.
your account
I
and get
agree.
in to anything?
Nope. We're finally got through the problems that I was having with the options, and we're wire transferring the money tomorrow.
Oh, excellent. Good deal. Perfect timing. You didn't lose anything either.
Yeah. Woo. But I didn't gain anything either on the couple that went right.
Yeah. That's okay. If we're still in a bull, I think we've got some really good stocks. We just need the market tone to turn back around for us. And ultimately, we may have to wait into February for that to happen. I don't know. If we're done with the bull market, God, I wish we were done with the bull market. I'm so tired of this worn out, overinflated market where nothing's holding any value anymore. If we do turn it to a bull market, it's going to be real easy to make money in the beginning. Real easy. And that's good because it allows you to build up that seed pile. And then we roll into a new bull market. And you just sink it into whatever. I saw Tanner actually went back to school. So he learned what he learned by paying somebody to teach him. And he paid $10,000 for some classes from pretty reputable guy, somebody that we trust, who's been doing this for 30 years and has been teaching this for 30 years. And he paid $10,000 to go to this class. Well, he decided here on Friday that he would go back to that class. Friday and Saturday, he was in class again just to kind of refresh it because the first time he went through it, he didn't know anything. And now that he's been doing this for a couple of years, he wanted to know, what did he miss, And plus, he had a host of questions that he'd like to ask. So he goes back, and he's there Friday and Saturday. Well, the instructor of the class, they were talking about the fact that we're in the end of a bull market, and we'll go through a correction phase, 3 to 6 months, and then we'll be back into a new bull. And he says, he's basically said the same thing that I've been saying. This is the best time to learn. Get all of this worked out now so that when you get to a new bull market, it'll be so easy for you to make money. It'll be insane. And so he pulled up a chart from the beginning of this bull market, which was 2009. That's how long this bull market has run, since 2009. And he got into a stock called Chipotle Mexican Grill. Let me pull up their stock for it.
that thing is beast right now.
Chipotle, there it is, CMG. So here's a stock valued at $530. Well, at the beginning, he pulled up a chart. He had this complete rundown. He only played this stock for the first 9 months in the new bull market. He had, let's see, I'll just pull it up on my phone because I still have a screenshot. Tanner took a screenshot of the chart and sent it to me. Let me pull it up real quick. I got to read it to you because it'll blow your mind. Tanner. There you are. Screenshot. There you go. All right. So he bought in 129.09, so January 29th, 2009. The strike price on the option was 50, which means the actual price of the stock at the time was probably around $55, $60. As you can see right now, it's $530. Okay? Yeah, this option price was $6. He bought 1,000 of them, or $6,000. He held it from 129.09 to 302.09. He held the option for a month. He held the option for a month. We've been making 2-day plays. He held it for a month because he could, because it just kept going up. It went from $6 an option to $8.75. So it was a lazy move, but he held it for a month. So he cashed in a $6,000 investment, went to $8,751. He made $2,751. He turned around and 10 days later bought right back into it for $6.26. And he spent $8,143. So he only pocketed a few $100s. He left it in from 311 to 423. Again, a month and a half he left that option ride because he could, because it just was making a move upward. No dips down. That $8,143 investment turned into $44,315 because he bought the option at $6.26 and he sold it at $34.09. He made $36,000 in profit. He bought right back into it again about a month later, 5/19. He bought that same option that he sold for $34.09. He bought it at $8.74. He sold it again a month later, less than a month later, for $13.21. He made another $22,000. He waits a couple of days. It's back down to $8.95. He buys it. He comes back out. He made $72,000 in profit. He goes right back in at $9.47. A month later, he sells it for $15.25. He made $85,000 in profit. He just kept sinking it back in. In October of 2009, he bought it again for $9.16. Sold it 15 days later for $11.52 for $56,000. In 9 months and 20 days on a new bull market for a stock that was valued at probably about $60. He made $275,000 on an initial $6,000 investment. So just stay patient. Just stay patient. It's coming. Now's the best time to learn. Does that money blow your mind? Did you think that was even possible?
That totally blows my mind. That's totally crazy. I love it.
The thing about it is I'll go back to IBM right now. If you had the money to afford this option, well, now we're going through a correction. We think we're going to go through an upcycle, but whoever's been playing this is their cash cow. And we are creatures of habit. They're going to continue to do it. They've just decided that instead of having the thing go down, they're not going to correct it to go up. So you got to wait for that new pattern to shake out, but you could do it all day long for that one. How much is an option on this, though? I got to pull this off my screen. I don't want you to see my account number. Let's see. If you're logged into your e-option, you could probably go see what the value of this is. Give me just a second because I'm curious. Almost there.
Did you record this,
Yes,
Jimmy?
yes, I did.
Okay. There was lag too. I didn't know if that was what because you're recording it.
I'm recording it locally on my computer.
Okay.
Hey, I'm actually $12 to the good on my account. I started with $1,500. I now have $1,512. So I'm not negative. That's awesome. Okay, so research, market option chains, IBM, calls only. Let's look at an April expiration date. Okay, right now the stock is $184 and change. A strike price of $170. Bid and ask is $15.90 and $16.65 on a call. Now you wouldn't want to buy a call now, okay? But I can't sink $1,600 into one contract. I don't have that yet. But these stocks, there's like a handful of them that are doing exactly what this one's doing, like clockwork. Well, that's one that you can tie into and leave it for a month. You know, if you buy a contract with an expiration date that's 3 or 4 months out, you can hold it for a month, and it's going to do this. I just don't have the resources to do it. Now, Catherine, on the other hand, she's going to go talk to her husband, and she said, come look at this stock. If you do have that kind of money, wait for this new pattern to develop, because this is a W. The W always signifies a W and an M signifies a direction change. Okay, W goes up from a bottom, and an M goes down from a top. And whoever's been playing this has been playing this for a really long time. So there are others out there like this that we can do this with on now. But at the beginning of a bull market, they'll be all over the place. In fact, there'll be more that look like VLO, like this. There'll be more that look like this than look like that. All right. I don't have anything else. If anybody else has anything, say it now. Speak now, forever hold your peace, or I'm going to turn this thing off. Nope. All right. Guys.
Thanks, Jimmy.
I appreciate y'all.
Thank you.
All right. No, thank you.
Thank you. Very informative.
Hey, Jimmy, are you just gonna just kind of sit back and evaluate tomorrow, or
Yeah,
are you gonna
I
be
would
looking to go
advise
into
nobody
something?
be in the market. I'm just going to evaluate. I'm not doing anything till we get to the 50. Okay, and I'm not doing anything until after Thursday, which is too close to Friday. So it'll be next week before I make any moves.
Okay.
All right. Bye, you guys. I'll talk to you later.
See you.